Good evening. This is Coach Mike with WinningStockCoach.com. Going to get started out with my weekly market overview video, and starting out here on the chart for the SPX, that's the S&P 500. If you recall last week's video, I talked about how we kind of had that discrepancy between our daily and weekly charts, and we really closed last week at a point where I encourage you to watch early in the week for a direction from that 2060-11 point that we had really just barely broken above the week before, and for that to serve as our direction moving forward in the current swing. Well, as you can see, the support level also of 2002 and 33 cents that I spoke of, we did make our weekly close below that, and we are back down in that vicinity area of that 1986 target point that we had. So basically moving forward into the coming week, even though I wouldn't be surprised to see a little bit of an up move, just because the markets like to be tricky like that, right when they tell you they're going down, they turn back around. I still at this point now wouldn't be surprised to see that 1894.95 target area that I've been speaking about for the past roughly month. Um, with that being said, to make things a little bit easier for you, allow the SPX to get below that 1986 support point. We had hit it just a few weeks ago. That was our first point right off the start of the pullback, was to hit that 1986. We did. We bounced. We're back at it. Even though we did make a lower weekly close and we lost the last swing low point, let's just make it that 1986. Let's get below it, and then we'll look at the 1894.95. The reason I say that is I'm making the video this week a little later than normal, sadly missing part of the Super Bowl because of a busy weekend I had. And looking at the futures, it looks like we could get a little pop to the upside. But the reality was, even though there were some stocks that did pretty good on earnings, including Apple's record-breaking earnings, a majority of the stocks did very poorly in my opinion, and the ones that still might have kind of did well on earnings, we saw a lot of guide downs for the next quarter, which worries me quite a bit as well. Information out of Greece last week was a little bit shocking. It wasn't really shocking, but how just out of the blue, once it kind of seemed like they might be doing okay, and then boom. There's quite a few things that would lead you to believe that we could see a little bit of a down move overall. Moving over now to that daily chart on the SPX. The reason I was saying let's get below that 1986 is we had this double top, which many times could just lead us to a double bottom, which in that case, if it hit the double bottom and bounced, then we've got some consolidation, which gets annoying. Getting below the 1986 will clearly break us down. If you're somebody that watches the SPY, watch the SPY's daily close, which would have been 4/12/16, December 16th, but the value on that's 197.91 for the SPY. I'm not talking about the SPY right now, but the SPX. So the value on the chart would be different, but on the SPY, 197.91. You get below that, and you're going to have a pretty decent downward spike in the markets, even though I don't know that it would be, I wouldn't expect it to be more than 2 to 5 days long if that support point's broken. But if we get below that 1986, again, you see that'll get below this double bottom, almost really a triple bottom that we've got working right here. And then we have this one little out of place bottom from the middle of December. We lose all that, hang on, 1894. It'll be a couple bad days in the market at least, should we give up that 1986 point. Now over to the DJI, that's our Dow Jones Industrial Average. It got beat up a little bit worse than the SPX. It actually made that close below our support level for our Fibonacci's. I do think, even if you had an up day or two along the way, you have those every once in a while in a downtrend, that we'll still see that 16,607.93 area. I wouldn't be surprised to see that either this upcoming week, but most likely it might take a week and a half, 2 weeks to get there. So we need to watch that area. The other thing I want to watch, just because, is more talk. There's always more talk when you have a red week about how the market's crashing and this, that, and the other. That last real low point we had before this nice up move that came from our October pullback. If we use that support point 16,380 and 41 cents for our weekly close, if we give up that weekly close point, it will be ugly. Those people that have been saying for 3 years that the market's going to crash, and every time you turn around that it just keeps going up, well, they'll start to look right this time after being wrong several times should we get below that point. So, you can only be wrong so many times before you're right. So for the bears of the world, and I'm not really a perma bull. I'm a market neutral. I just tell it for what it is and tell it like it is. And what you got right now is still the potential to make a decent down move, but it not really hurt the longevity of this up move unless we get a weekly close below that 16,380 and 41 cents. So I want you to kind of be focusing on that in the upcoming week because it is going to be really important to you. Long-term positions that you might be in, your longer-term investments, they're okay for a little bit of a pullback because they were okay on this pullback. They were okay on all of these little pullbacks. So you kind of have to give it a little bit of pullback. But that 16,380 area, that's important because your long-term investments might not be okay if we give that up. So it's important that you kind of make a note on that for the Dow Jones Industrial Average. Now moving over to the RUT, this is the Russell 2000 Small Cap Index. We really haven't done much for a few weeks here on the RUT. But if we do get down below 1152.45, we'll probably hit that 1078.06 area. And other than that, we pretty much got to break above the weekly high point 1215.21 as a resistance, even though I would say that if you broke above 1188.93, you'd probably be okay to enter small cap positions for longs. And as far as the shorts go, again, that support point 1152.45, I would wait until you get below that just because the reward side of a trade to your first support point is not very good right now compared to the risk side. So let it break the support and then you got plenty of room to fall for a nice short trade. Or, we have to assume that a support will hold, and when our assumptions fail, that's when we enter our trades. And as long as we hold that support, we could get that up move and get that break up to 1238.23. I do not think that break of 1238.23 is even going to be possible unless we can break 1188.93. So the way it looks right now, you could say, oh, that was a red candle. Well, it went up the week before after a red candle. So we've been going sideways on the RUT for several weeks, except for Christmas week and New Year's week. 2 little holiday weeks, we popped up and came right back. Besides that, we've had about 3 months of sideways. So let's not, call it anything than what it is. If it quacks like a duck and walks like a duck, it's a duck. And small caps have been pretty flat overall. And finally, here we are over at the NDX. This is our Nasdaq 100. You see, we came really, really close to my last long target area the week before last. We came within the 0.5% that we try to be within, and that's what we got. And then we came back and closed back below our weekly swing low point. Really simple here for what we got. I'm going to draw another little line here to make something easy for you. We've held 4 weeks in a row, really, right off of this swing high point at 4,100. So if we get down below 4,100, I think you're going to see that 39.28. And again, much like the Dow, I want you to start focusing on a longer term support point. And that will be 38.15.47. If we get down below that, then you need to start seeking an exit point for long-term investments. I'm not going to say that you have to do it the first day you break below it, because many times you could break below it and then get another little pop-up to retest a previous failed support point. But, if it breaks down below it and the following day continues, then you could either exit then, realizing that, hey, time's up. Or you could be like one of the people that wanted to jump out of a building in 2008 that said, man, if I would have just listened to that market overview video that guy put out, I'd have been out of that instead of being down 75% in my entire portfolio. This is Coach Mike from winningstockcoach.com wishing you the best of luck in the upcoming trading week, and God bless.